Okay, I'm very excited to have on the Goldstein on Gelt show Barbara Weltman. She's an attorney. She is a prolific author. She's actually written J.K. Lasser's Small Business Taxes 2018, and she wrote J.K. Lasser's Guide to Self-Employment. She talks a lot about business and entrepreneurship. And in fact, Barbara, I kind of want to dive in with this issue because I think a lot of entrepreneurs have very similar problems to kind of normal families, people dealing with a big question about cash flow. When you're an entrepreneur and you're just starting, how do you deal with that kind of thing?
You have to recognize that just because you make a sale doesn't mean that you have cash on hand to pay your bills. The inability to manage your cash flow can be the undoing of your business. So you do have to get a handle on what cash flow means, which is basically money coming in and out, flowing in and out of your business, and being sure that you have enough on hand to meet your bills, to meet your payroll requirements, to pay your taxes and other obligations so that you can continue in business.
That's such a critical point for so many people. We talk a lot about just the importance of having an emergency fund. And some people, well, let's say everyone, has bigger expenses some months than others. And if you don't have something to smooth it out, then you can really find yourself in trouble, especially if you end up in credit card debt or you just simply can't pay a bill. Do entrepreneurs have it worse?
Well, for sure, because businesses do cycle. There are seasonal businesses that may struggle in the off season where where the rent doesn't change. You still have the same rent every month, but the money isn't necessarily coming in. So there is that challenge. But small businesses do have the opportunity, if they're sound, to put a line of credit in place where they will have access to funds if they need it on a rainy day.
What would you say is the difference between a line of credit and just using your credit card and paying the minimum monthly payment?
The biggest difference is interest cost, because there's no way that the line of credit interest rate will be as high as the interest on a credit card, even for cards that offer promotions and jump on and interest free for a little while and whatever. No way is it going to be equal. Now, with that said, I think using credit cards in a business may be appropriate in a certain situation. For example, let's say you need a piece of equipment quickly and you don't have the cash on hand to pay it right away. So maybe if you want to charge the purchase to a credit card and you're just paying off that particular expense, that could make sense. But again, generally, credit card financing for a business is very costly. Even if you get frequent flyer miles, it doesn't really help.
Right. At the end of the day, I think more people statistically mess up on their credit card debt or many of their debts, and it does not make up for the amount of bonus that they get from their frequent flyer miles. Are there other good sources of cash flow management that people should consider other than a line of credit?
I think it's up to the owner or the person in the business that's overseeing the finances to monitor what's going on. There are various apps and tools that you can use just looking at your finances, what's coming in and out of the business on a daily basis. There are some apps that will give you alerts saying, your bill is going to be due in 3 days or something like that, so that you can stay on top of what's happening. In other words, using cash flow management tools to monitor what's going on.
We're speaking with Barbara Weltman, who wrote J.K. Lasser's Small Business Taxes for 2018. She's actually been writing and updating that book every year. She speaks a lot to entrepreneurs, to business people. She talks a lot about taxes. We've been talking a little bit about managing cash flow. And Barbara, one of the things that I think you're really addressing, which applies to everyone across the board, is realizing that you have to think about your cash flow. Even people who are in retirement, for example, have so many issues with cash flow because they might be expecting money coming due from a bond, but it's only coming due in 6 months and they have to cover it. Or they simply might not have planned very well and don't have enough cash flow at all. And it sort of reminds me of the way an entrepreneur might think who's trying to build his business. And he says, I could borrow money and just try and build more rapidly so that I'll be able to get more income, or I could go slower and try and build a little more organically. Do you tend to see people go one way or the other, or make a mistake one way or the other?
Well, I think there's so much variety out there, and I think part of it has to do with particular owners' risk tolerance, how they feel about certain money matters. There are certain people who are very averse to any kind of debt and will take any path that avoids the debt. And there are some people that have no problem with loading up on debt, and the kind of like, I'll think about it tomorrow kind of kind of
Yeah.
business owner. So I think anywhere in between is where most people fall.
Yeah, I like that you use the term risk tolerance in talking about debt, because it reminded me of how people will often take a mortgage and they may take an adjustable rate mortgage, or here in Israel, we'll find people take mortgages in different currencies. And I remember actually when I first bought my first house here, we went to the bank to get a mortgage, and the banker said, you could take your mortgage in Japanese yen because the interest rate's basically zero. And, she was trying to sell us this. And I said, but wait a second, I'm going to have to pay back in yen. And, I earn in dollars. And how does that work? And she said, yeah, but the interest rate's zero. And the fact was, by people not understanding the complications of something as simple, what you would think is as simple as a mortgage, you end up all of a sudden being exposed to huge risk. I think that I really like how you refer to debt and cash flow management as it relates to risk tolerance. Tell me a little bit more about how people should plan for their future in terms of either borrowing money or even estimating their taxes, because especially as people are getting older and they're switching their portfolio to something that is going to be more income oriented, are there certain plans that people should really focus on?
You raise a great point with taxes, because as we get older, we don't have the sources of income where there's income tax withholding, and the burden is on us to have the cash on hand to pay the taxes, just like many business owners have to do. For example, I don't know how many of your listeners would be interested, but the IRS estimates that 10 million taxpayers in the U.S. pay penalties because they underpay their estimated taxes. And why do they do
Wow.
that? Well, some might be ignorance, but I would suspect that most just don't have the cash on hand to pay the taxes when they come due. And so it's a question of building a habit and setting aside the money that you're going to need to pay your taxes when they come due. And again, this is a discipline, just like a business owner, an individual has to recognize the obligations, recognize the need that just because you had a bond mature and now you have $10,000 in cash doesn't mean that you can necessarily spend all that $10,000. You perhaps have to set some money aside if there's going to be future taxes to pay.
Wow, that's actually a real concern, because who thinks about it? Who even wants to think about estimated taxes? Just for the record, people who live in Israel, Americans who live here also, they still have to pay their estimated taxes. It doesn't go away. How do people calculate how much they should be paying, or how much should they think about putting aside?
That's a big question, and I get asked that all the time. It's very difficult to estimate exactly what you need to pay, because you don't want to overpay, then you're making an interest-free loan to the government. You don't want to underpay too much, because then you're going to incur penalties that you can't write off. So you want to get, it's the Goldilocks experience, to get as close as you can as possible. But there are certain rules in the U.S. to avoid penalties on estimated taxes, such as relying on your pegging your current year payments to what your liability was in the prior year. And if you do that, you won't pay estimated tax penalties, even if you fall short.
I see. You might have to pay interest, though, if you fall short, because it meant that you should have paid more money?
Well, it depends on how things work out, but you'll
Got it.
avoid penalties.
Okay, so a good rule of thumb there is look how much you paid last year and use that as the tool to calculate how much you should pay in estimated tax this year?
Yeah, there are a couple of wrinkles there for high-income taxpayers who have to pay a little more, but that's the general idea. And work with a good tax advisor. That's really a really good thing to do.
That is true. And of course, people could read really good books about this. And in the last few seconds, could you tell us how people could find about your books and what you teach?
I have a website, barbaraweltman.com, where you can sign up for an idea of the day and get my newsletter, Big Ideas for Small Business, both of which are free, and to find all of my books, including J.K. Lasser's Small Business Taxes 2018 and J.K. Lasser's 1001 Deductions and Tax Breaks 2018, which are available through Amazon, bookstores, and other online sources.
Okay, so we will put a link to all of that at the show notes of today's show at goldsteinongelt.com. Barbara Weltman, thanks so much for taking the time.
My pleasure.
You've been listening to the Goldstein on Gelt Show with money maven Doug Goldstein. Check out all of Doug's money ideas at goldsteinongelt.com. Doug specializes in helping people who live outside the United States handle their U.S. investment accounts. If you have a question that you would like answered on the air or off, contact Doug at his website or send him an email to doug@profile-financial.com.